An organization that does not have internal controls is prone to fraud, to theft, to errors, to so many things, to not even growing. You cannot even understand how your organization is running because you don't have internal controls. So I'll give an example of internal controls. Number one, delegation. Who does what? Very important. Hello, karibuni sana. This is your cheerleader of dreams. Here we talk about simple, practical ideas on how you can start, grow, and scale your successful business. So I'm Dr. Regina Kingori, CEO, CPA-K Africa, and today we have a very interesting topic on internal controls in your business. How do you enhance internal controls in your business? And I'm going to give you very simple ideas on how to do that. I know you're asking, what is internal control? So internal control are set rules and policies and procedures an organization is implement to provide direction and increase efficiency and strengthen its operations. I know that it sounds ambiguous, but these are rules. Rules like when we sell, these are our set rules on selling. When we purchase, this is what we follow. When we get a new customer, this is how we graduate them to give them a credit. So, and these rules are totally different in different organizations. This is you setting some of these procedures and rules for your organization. And I'm going to give you examples so that you can be able to understand what we are talking about. An organization that does not have internal controls is prone to fraud, to theft, to errors, to so many things, to not even growing. You cannot even understand how your organization is running because you don't have internal controls. So I'll give an example of internal controls. Number one, delegation. Who does what? Very important. I know when an employee comes to an organization, you give them a JD. And some of this JD don't even, it's something that is picked from internet. It doesn't even relate to what they do. So it is very important to do a delegation rule. Who does what? Who signs legal documents? Who answers a client, a customer? Who signs a check? Who authorizes or even hiring casuals? We hire people every day or do this. Who does what? Who operates what over the system? It is very, very important. So delegation, all duties, how you bring the duties. And it is very important to even look at daily routines for staff within the organization. When they come in, what do they do on a daily basis? And how that check. Some organization you find a lot of duplication or a lot of slowness of a system, that this documents is checked here or it's checked where. It could be an internal control issue, but it's very important to know who does what. That is what we mean by delegation. Authorization. Delegation and authorization is very different. And it is very important to have even authorization. So when we are doing petty cash, when someone comes to say, I need fuel, for instance, I need 1,000 to fuel my car, who do they talk to? Do they have a document where they write and they say fuel to fuel the car to go where? And who signs that document? When it is taken to the accountant, who signs? Do we have a manager who authorizes that payment? And after that payment is done, do we get a receipt back? That is a procedure that we are talking about when we talk about internal controls. When it comes to assets within the organization, when we buy a chair, do we know how many chairs are there in the organization? When we buy a laptop and a printer, do we have a manual records where we record? Do we have a sticker where we give these assets a name? Or one day we are told a printer is not working, and actually the printer that was working left, and we got another printer that is not working replaced. So do we have a register for our assets? And at what time do we say we don't have enough chairs, we need more? So when we have a breakage of something, can we be able to monitor? Maintenance, proper maintenance of company assets. We have organizations that even have machineries. At what time do we do repair, servicing? We have vehicles. They need inspection. They need licensing. Do you have a way out that we can be able to know this vehicle requires a license at this particular point? It requires an inspection. It requires a servicing at this point. When we talk about cash handling has a lot of issues, and it should require a lot of internal controls. So when we are handling cash, who handles that money? When a client comes and pays, and that's how you find that some organization, they have written that there are no cash payments is an internal control issue. So for you organization that is able to receive cash, who does that receiving? Who takes that money to the bank? What are the controls at every level? At the end of the day, can we be able to look at all the cash sales that were done in the day and the money that went to the bank or the money that was transferred to M-Pesa, and who did what? And can we be able to monitor that on a daily management? Otherwise, you find a lot of thefts around the cash, especially organizations that have cash handling. You find a lot of theft and a lot of stock loss because you're selling these items in cash. So you don't monitor. You may even think I'm monitoring cash, but you're not monitoring stocks. So somehow the stocks are being sold. So purchases. So when we purchase an item, how do we graduate this supplier? At what time did we say that this supplier we're supposed to buy from this supplier and not this one? Did we issue them an LPO? Did we get a quotation? Did we verify the items that we request to come to the organization? And when they came, did we receive what we ordered for? And was it counted? Did we get somebody who counted that purchase? How was this purchase put in the system as stock? And did we manage everything? And if they were returned, something that came that did not conform to what we wanted, how was it returned? Was it a credit note issued on that invoice? So, and did we get documentation, the LPO? When we received these goods, did we write a good received note? Was there a credit note for any return? So all that documentation supposed to be there, and every control at every level. Inventory, we talked about stock. How do we do stock monitoring on a monthly basis or a daily basis? There are organizations that are able to do stocks on a daily basis. Do we have a software that we're able to help us with stock management? Do we do physical counting? Do we verify the physical and the software? Do they match, or are there variances? And these variances, can we be able to explain them? Can we be able to explain why are we having variances in our stocks? Where we keep these stocks, have we kept stock in a very good ways? Is this stacked in a way that it can be monitored? You go to an organization, you go to their store, and you're like, what is happening here? Because somebody who is a storekeeper in the organization, they want it to be all over the place because of control issues. They don't want you to understand what is going on. So you come to the store and you think you have a lot of items which you don't even have. Do we have items in the store that are getting stale, that are getting expired, that are spoiling there? And do we have a system to monitor what is going on, that we are having stocks that is being unsold? Do we have storekeepers who are ordering items that are not even sellable? So there's a lot of areas when it comes to stock management and the stock keeping that should be understood, and every internal control should be kept. If we bought something 3 months ago, why is it still in the stock? what is happening. And some storekeepers who order items and yet the items are in the store. So inventory management is a very huge issue, and you should have controls at every level. Returns and refunds. Returns, and these are returns in both sides. When we purchase, sometimes we have returns. When you sell, sometimes your customers may return something. So at both sides, how do we handle returns? And do we issue credit notes or do we receive credit notes? And are they acted over in the accounting system? And if they are done, the credit notes in the accounting system, who authorizes, who checks? So you find some organization that items after being returned, possibly you are selling to a customer, they did not pay, it comes back and it is thrown somewhere. So nobody authorizes. At the end of the day, those returns even get lost. So very important to monitor the returns and everything and have internal controls at that area. Payroll. So what are some internal controls around the payroll? So who hired who? How many hours did the people work? Do we have a biometric where they come in and say, I came in at 8:30, I left at this time? Who hires the casual wages? How much are they paid? How many leave days have they done? Some of us, we don't even, especially HR functions, we don't have those HR functions within the organization. So you don't, even when the employee asks for leave, they will ask for that day's leave during the year. So they come and tell you, oh, I need to do an exam for 3 days. Oh, my mother is sick. And they know that you don't have that recording. You cannot be able to even monitor their leave days. So, and even payment. Do we have a payroll system that is paying these people? Are there deductions done on their behalf properly? So those controls. When it comes to casual wages, did they actual work? Because that's how we have organizations who have ghost workers. And we wonder how ghost workers came to be, especially organizations that hire a lot of casual, like construction industry. So you're doing a lot of construction, you're doing Koroga, and you need 100 people. Did we actually employ 100 people? Or the foreman wrote 100, but he actually employed 90 people, and the other 10, you can't even tell where they are. And because you just see people working up and down, you think that all of them are 100 people. Do we have a formula that there's somebody there who gives? Did this casual bring an ID? Did they sign somewhere when they came in? And at the end of the day, did they sign somewhere that they left? So those are some of the details. And when the payment is done, the person who hired should not even be person who is paying. So that when the payment is done by a totally, that is the internal control, is done totally by a different person who says, let me see the attendance list. So you came Monday, Tuesday, Wednesday, your money is this one. Then you came Tuesday and this is your money. And you pay person who signed that document that they came in. So payroll has a lot of controls issues that should be done. Accounting software. So if you have an accounting software, and I'm going to talk about control issues around the accounting software in the next area, let me talk about that. So those are some of the examples of internal controls at every level. So internal controls around the accounting software that we use. Most of the time when we are having accounting software, we don't consider internal controls. Yet most of our organization, the theft and mismanagement is happening around the softwares, the software that are being used. So what are the levels of data entry? Who does what over the system, and who has the rights? So when we are doing a sales and you need to raise an invoice, who does the invoice? Before you even raise an invoice, who does that customer entry records? Remember, we have to create a customer. Who does that work? Who raises that invoice for this customer? Because I found organization where a cashier raises a fictitious customer. this customer is not anywhere. But because they have a system that the invoice for these items to move out, we need an invoice. They raise a fictitious customer, they raise an invoice, items move out, they go out. When they go out, this accountant comes and credits that the customer paid. So this person is holding the system, is holding the entire system. So they create a customer, they even give out that invoice to the manager. The manager authorizes the items to move out. But this accountant, because they know what they are doing, they are working with a sales team. So the sales team, when they receive the items, they sell wherever they are selling. So the accountants come back to the system and declared that invoice as paid. So you as a CEO or as an entrepreneur, you don't know what happened around the accounting software. And that's why I advocate for the accounting software audit. Very, very important. So levels of data entry. Who inputs the customer? Who does the invoice? Who declares that invoice paid? And when the invoice is getting paid, where is the payment? Did we receive a check? Did we get an M-Pesa statement? And you find some organization, we don't do bank reconciliation. And that is the problem. You cannot even tell if somebody paid or they did not even pay, because you don't even do bank reconciliations. So levels of data entry, and let's not have accountants who does everything. They are the manager, they are the one doing customer, they are the ones giving out items. Let's have a system that has internal controls. Access rights, who access what on the system? Backdating of data, can the system backdate data? Some systems, some softwares, you raise an invoice, and after raising that invoice, when the items go out, you can backdate it to last year, February. You backdate the data. So the data moves out like nothing happened over the system. Deleting of information. Can the accounting software delete information? So if it can delete information without tracing, very dangerous. Audit trail. Can we be able to do an audit trail over the system that this one created the invoice, this one does the payment, this one does the reconciliation? Audit trail over the system. Approval system. The system should allow you to do an approval system. When the credit note is being raised, for instance, can the accountant raise a credit note and then a manager is able to approve? So approval system, does the system has that approval? Reconciliation, and I've talked that. If your system is not able to do reconciliation, or the people operating the system cannot do reconciliation, then you are not doing any business. And this reconciliation, bank reconciliation, those M-Pesa payments, we need to do reconciliations. We need to do stock reconciliation. Sales reconciliation, every single day, do a sales reconciliation. Today we sold 100,000, and this is a reconciliation. And purchases reconciliation. What did we buy? Was it necessary? Where is it physically? Where is it? So those reconciliations should be done on a monthly and a daily basis. Reporting. Does the accounting software give you a report? Can it give you a management report? Profit and loss statement on a monthly basis? Balance sheet. Can it be able to provide all that information? Or the accountant is just using it to sell. They don't even they don't input purchases, they don't even input expenses. So at the end of the day, the accounting software cannot even give you a management report. Very important. And how do we even handle petty cash reconciliation? There are systems that can even do petty cash reconciliation. Very, very important. So for the next few minutes, I give you an example of internal controls. And I'll give an example of a manufacturing company. Let me give an example of a manufacturing company. So this is how you set up your accounting software. Simple very practical. For a manufacturing company, the very first thing you need to purchase your raw material. So how do you do LPO? How do you receive these items? Did you get best prices? When the items came, did we issue a good received note? Did we get total documentation, or was it counted properly before we stored those raw materials? Then we graduated these raw materials to production. When they are and we have different storage. Don't mix everything, raw material, finished product, no. Those are internal controls. So when we graduated this item from the raw materials to the production area, did we have a document that said we brought in 10 sacks of this, 3 sacks of this to the production area? And I'm imagining the production has an ingredient level that says this and this is what you require to make this product. So when we brought in the production area, then we produce. We have now finished stocks on this side. Did we have a book or a recording that said on this particular day we produced 100 sacks of this? Then we bring it to the finished stock store, and we record it at that particular point. So these finished products is what we are selling over the accounting software, because now we need to sell it. So we go to the stocks, and how do we now move these stocks when we are taking it to the customer? So we also need recording on how we are selling this stock to the customer. Remember, most of us sell over the system. So when you're selling your sales, you have to now monitor your finished goods store. Then when we are selling, now we come to selling, we create a customer. What are the controls around that area? Is the customer paying via cash, or are they paying after a number of days? How do we monitor these days? You've given them 30 days. Who monitors that 30 days? Or we don't have a system to monitor that. At the end of the 30 days, nobody even cares about this customer. So after that, when we receive this payment, how do we key in that payment over the system? And the data, how do we keep monitoring the data? All this system is very important. When we sell, we sometimes get a return. The customer said, oh, I didn't want this. When the item came back, how did we return? How did we issue a credit note to this customer? And how did we receive this good back to the system? Then we talk about data. So already we have created data, a few data. How do we keep monitoring them? Or do we have areas where now the salespeople collude with the data and they come back to the system and they operate the system and they say this customer paid and they did not pay? So the entire process is very important. And then how do we keep the records? Remember, we have records from the time we were purchasing to the time we are selling. To all this time we have even physical documents, purchases, reports, receipts. How do we keep those records? How do we do the reconciliation that I talked about? The other part is that we have employees who are doing these purchases, they are doing the selling. How do we keep their records and the internal controls at every level? And then how do we make sure that this process is extremely efficient? So internal controls is very important to organization. And I always say that before you even think about growth, think about how you put your structures within the organization. Can you know that whatever you're selling, you're totally receiving back that money? There's no theft, there's no areas that where you're missing customer. Some of us don't have even internal controls on areas of how we receive our customers. So we receive our customers, they are not served properly, they go. We don't even monitor our customers. This year we have 200 customers. Did we satisfy all of them? Did we lose some? The ones that we lost, why did we lose them? It's also internal control, so that you are also able to keep a system where you can attract and retain customers. So internal controls is very important. And even as an organization, if you have issues on how to enhance your internal controls, that is also a service that we're able to provide as a company, RWK Africa. You can talk to us and you can help you raise structures of internal controls, because when the organization is managed properly, bookkeeping is proper, internal controls, then you can design that organization or that business to scale. So asanteni sana. Thank you for listening to me today. Till next time, God bless you.